Hey everyone, it's Marin here. I got a special guest, an industry 40-year veteran in the uranium. And what's more important and impressive, he's one of the only people I know in the market, probably the only person in the market, who's been on both sides of what I've called the Colder War, where he was the president of Cameco America, the largest producer in the Western world, and also the advisor to the chairman of Kazatomprom, which is the largest producer of uranium in the world, and also worked with the Russians. So Scott, Melbye, thanks for doing this for my subscribers.
Marin, it's great to be on your program, and especially at this time where a lot of the things that you've been writing about and that we've been talking about for years are coming home to roost in the uranium market, and it's a very exciting thesis right now.
Well, it's playing out, and your company, you're the president and CEO of Uranium Royalty Corp, which is listed on the NASDAQ, UROY, UROY. At the time, the industry dismissed it. I talked to the senior executives of some of the largest companies in the world. They said they didn't even know what the plan was. And being the first mover advantage, you literally picked up a royalty on cigars. You're doing royalties and streams. You got Cigar Lake, MacArthur River. You've got Langer Heinrich. 3 of 18 royalties and streams you have in place of some of the largest producers in the world. You've got to deal with Husab, that most people forget is probably also one of the largest producers in the world. And you did this when uranium was less than $30 a pound. So the first mover advantage, why is this so critical where we are today and moving forward?
Yeah, no, it really is an advantage. And I think when you think back to when we were founding this company and launched in December of 2019, many would have said, well, maybe it's still a little early. Mines aren't being developed. Existing mines are being shut in. But that's the perfect time to get up and running. And since that time, be listed on the NASDAQ, which has really boosted our trading volumes. But now as we sit going into the most exciting time that we've ever seen in the uranium market, we have a company that has an incredible inaugural portfolio in place. But we're also on the ground and running in terms of building that portfolio, getting out, meeting with miners, developers.
Yeah, let's get into the portfolio. Yeah. Like you've got over 1.8 million pounds secured, you're probably closer to 2 million, and an average price of $44.39. That's $44.39. Yeah. The spot price as of this recording is around $70 a pound. But to go in and get 2 million pounds, which you've already secured in this market, well, look at Sprott. They're not out buying the market because they can't secure the pounds, both in the spot market and the long-term market. So you're looking at that value. So this isn't just a royalty and streaming company. You have secured pounds in the ground. And I want everyone to truly understand that's not familiar with my work, why having Western supply above ground is so important for the security of Western demand.
Yeah, well, absolutely. If we look at the global supply and demand, we're in a structural deficit. If we take it one big world, well, we know with the events of Russia, Ukraine, and this bifurcation of the uranium market that's underway, there's a Western world, and then it's almost dividing along BRICS lines. Well, I know that Kazakhstan probably falls into the Russia-China camp rather than the Europe-North America camp. And so this shortfall that we're seeing, the squeeze that we're seeing in the uranium market is really more pronounced in the West than it is in the East. So it puts value and premium on mines in stable jurisdictions like Canada, the United States, Australia, and parts of Africa, not everywhere in Africa. But that's clearly a focus for URC, is to be an investor and a capital provider to those mines that are in that cohort that can come into production and help fill this gap. It's not going to be quick, which is going to really put pressure on prices, but we're in position and looking to grow our portfolio.
Now, look, it's well known, open disclosure. I'm a big shareholder, big supporter of what you're doing as the CEO and president, the whole team of what you call URC, Uranium Royalty Corp, which is also listed on the big board in Toronto on the TSX. I'm all about the big board in the NASDAQ, but let's talk about value. Everybody knows I'm an alligator. I like to sit there for value. And I'm looking at this company today. You take all these independent analysts, the bankers, and their current NAV is at about 2/3. So you're trading at about 33, anywhere between 30 to 30% discount to the NAV. I want you to explain to potential, investors out there or people trying to learn about NAV, why that is such a discount to such a strategic metal like uranium, where the peers in the gold and base metals and silver are trading anywhere between 1 times NAV to 2.8 times NAV, but you're trading at about 2/3 NAV, so just under 0.7 NAV.
Well, how we got to that situation, it is a wonderful entry point for investors, is that in 2021, we were the best performing resource royalty stock in the world over the course of that year. We gave back a lot of those gains along with all the uranium names in the space in 2022 as the broader market risk off caused some sell down on the uranium names. As we know, in 2023, we're back in vogue again, and to date, I think we're the best performing royalty resource company year to date in 2023. But we're still are trading at that 0.7 P to NAV, and we will get back to where we were trading at par and premium, and certainly that's the model, and it's one of the secret sauce of the royalty business is that we tend to trade at premiums to NAV and acquire assets at discount to NAV and build shareholder value in that fashion.
What a lot of people don't understand, where you're different than a Franco-Nevada or a Silver Wheaton, you've secured, I call it 2 million pounds of physical uranium that is now stored in North America. If you think about this for a second, the NAV doesn't even calculate the increase of price of uranium, which we all know, even the utilities are admitting it's going higher, and any future deals that you're doing with your contacts, both in the West and the East. So if you're to play uranium, I've always said this from day one, this is the lowest risk way to play something if you want price appreciation risk and the royalty appreciation risk, which leads me to the next example. When the company started as a royalty and streaming company, people are like, well, this has never been done before in uranium. Again, the first mover advantage. But in this inflationary world, why is this such a strategic benefit for shareholders?
Well, the royalty and streaming model is ideal for investors because it gives you elements of an equity investment without a lot of the downsides of that. We're typically a top line revenue receiver of revenue royalties. We have aspects of physical commodity investments like Sprott or Yellow Cake. We have elements of an ETF in there because we have diversified exposure and risk. But that ability to have direct financial exposure to uranium mines and developments around the world without the cash calls of a partner in that project, without being suffering from the inflation blowups and capex blowups that we've seen in a lot of commodities,
and operating risks, like everyone,
operating risks as well.
Mining is a tough game. Anything that can go wrong will go wrong, and more. And that's why I am such a big fan. If you look at some of the biggest companies, the biggest market value gold company is not the largest producer of gold in the world. It's actually Franco-Nevada, which is a royalty company. And that's what we're bringing the financial discipline to the uranium sector. And you get the advantage of your team's knowledge and the diversity risk. When you have a mine, if you're in Africa, or the capex blowouts in certain places in the Athabasca Basin, where certain people are saying, well, you got this high grade mine, there's no roads, there's no infrastructure. Try building something that has to be 2 weeks on, 2 weeks off, that could actually last -30 to +30. Think about that 60-degree Celsius swing from summer to winter, and it doesn't matter what happened, the people are safe. You're talking about billions of dollars of capex that you don't get exposed to, and that's the beauty of that model. So you and I have watched, and I put serious money into this deal. I believe in it, but nuclear is just starting to get accepted. The price has gone, from the lows when you started the company down $17 to about $70 today. What do you just say to someone going, oh, the run is done? What is the upside from here?
Well, clearly, yes, uranium price has gone from $17 to $70 a pound since 2017. But we're still now only getting into the range of price that incentivizes new mines. The best mines in the world, obviously Cigar Lake, MacArthur, are already have returned to production. You see U.S. players like UEC looking to move ahead in a 60+ uranium environment, but those are some of the best mines in the world. Most big operations that have billion plus capex need $75, $80, $85 plus to move ahead. So truly, we need probably 8 to 10 new mines coming online around the world between now and 2030. And that's giving Kazatomprom, Cameco, Orano full credit, full production in their mines. We need 8 to 10 more on top of that. And that's where we're looking for those companies and trying to invest alongside of them. And some of them we already have in the portfolio.
Look, you've done a great job early on because you knew the Kazakh environment so well and the key players. You structured an incredible deal for the shareholders of UROY or URC. But moving forward, Kazatomprom just came out and said, we're going to increase production. We're going to go deeper penetration. And long-term KRO subscribers know that I said, in 2020, I talked about all the reasons why they would have to cut production, which, as you and I both agreed at the time, they did. Let's talk about the issues that people don't understand. This is not like flicking a switch, although the government bureaucrats like to say that. But in reality, you got sulfuric acid issues. It's not readily available. And how do you get it to secondary? As you go deeper, the penetration recovery, more acid per pounds as you go deeper, higher costs. Also, if you look at their actual contracts, are they going to be able to even meet that, even with their increased numbers? So answer those questions for me and tell you the market what you think about Kazatoprom's declaration that they're going to be able to turn the switch on.
Yeah, I know. And that, that's a very fresh news. I mean, that announcement came out on Friday, and I know it put a little pressure, on Friday and early this week on equities. I think that is the biggest overreaction I've ever seen for exactly what you've said. You're talking about a company and a country that has a hard time meeting their minus 20% from licensed capacity levels because of acid, because of workforce, because of supply chain. And to just come out and say, oh, we're going to go from 65 to 75 to 80 million over 3 years, it is impossible. And, I note that it came out on a day when the CEO, the previous CEO, was fired and new person comes in. And maybe that sounds good to throw that kind of claim out there, but it's not feasible in any way, shape, or form. Even if it was, I argue not a single pound will come to the market as a result of that, because of the Russian ownership in Kazakh mines now exceeds 50% of the mines. China is very quickly gobbling up the other half. This is the big elephant in the room, through direct ownership and JVs, through huge contracts, 2 contracts of which were greater than 50% of the net asset value of Kazatomprom that they've signed, and this global trading hub in Alashanko, China. Folks, little or none of this uranium is meant or going to make it to the West. It took 2 years for them to make an export through the Black Sea, through Azerbaijan.
And that's a total, hey man, we know that if you're a Russian, talk about all the advantages to delayed delivery. And something we didn't even get into that I've kind of talked briefly to my subscribers. You look at the spot, historically it was 30-day settlement, 30 pay, you get your uranium delivered 30. Some big companies are taking 8-9 months to get delivery on a spot transaction that was agreed upon in 30 days. That people don't even talk about. Number 2, look, we both know the Kazatomprom executives well. When they did their big IPO, they used my research in one of their PowerPoints. I've never worked for the company. I have never been a consultant to the company, never been paid a penny by Kazatomprom. But I find it very interesting that it's the former CFO is now the boss, and name me a single mining company that has ever done well in that situation. Great on Excel, but reality is a different can of worms. Now, something that nobody is talking about, you got Sprott sitting on over $67 million in cash. They bought almost nothing since September 5th, maybe 130,000 pounds. You got a fund in Singapore, 500 million pounds. And now the Kazakhs, they've come out with a new fund sitting on 250 million pounds that plan on going on public, whether it's Middle East or in the London exchange, probably both, in my opinion. So you're looking at almost $1 billion of cash sitting on the sidelines, ready to get into this game that you've been doing for 5 years, where you've scooped up the cheap pounds. What does that demand do just towards the spot and long-term market regardless of the Japanese RFPs that are coming in, and we know they have to purchase. So let's talk about that angle.
Yeah, well, we have a very different market now. I mean, we've been producing globally at a rate of 50 to 70 million pounds a year less than the world's 438 reactors consume each year, close to 200 million today. That was never a problem when we had an overhang of inventories, secondary supplies, underfeeding, all those things. Well, what's happened is all these years of producer discipline in Canada, US, Australia, Africa was rebalancing the market. And then along comes the speculative interest led by Sprott, but also Yellowcake, but also Anu now coming, and the Singapore fund, and even just companies like UEC and URC buying what now, probably close to 8 million pounds off the market on a speculative basis. That's cleared off all the excess inventories. And it's not an exaggeration to say that we've transitioned from an inventory secondary supply driven market to a production driven market in 2023. That means the marginal pound needed to meet demand in the spot market is coming from a produced pound, not an inventory pound. We haven't been in this position for decades. And so when you have these kind of numbers, these kind of hundreds of millions of dollars coming into the market, it's not unrealistic to talk about $100, $200 a pound. And I know I've always been reluctant to throw those numbers out there in the past because I don't want to be seen as crazy, but there is nothing to keep the uranium price. We have inelastic demand. If you're a utility, you mentioned RFPs. We have Korea, KHNP, the Korean utility, is out for 3,000 tons, over 7 million pounds of uranium starting in 2025-26. We have probably 5 or 6 other RFPs that we learned are coming at the recent World Nuclear Association meetings in London. So, those are have-to buyers. They have inelastic demand. They need to buy uranium. And frankly, they can afford to pay twice the current price of uranium, and it doesn't impact the competitiveness of nuclear power. That's an important point. But the speculative interest, I think it's not the catalyst. I think the catalyst in our market are these broader supply and demand fundamentals, geopolitical risks, but they are an accelerant. And you throw that kind of dollars at limited inventories in the market, and we're off to the races, which is why URC thought, what a great strategic opportunity early in our formation to back a truck up and buy uranium at below prevailing production costs. We can buy it in the drum at a warehouse where the utilities need to buy the material for less than any producers around the world can produce their own pounds. So that was
just like back then, that was a no-brainer. The situation today, in my opinion, and I took significant risk as I underwrote the deals for you and your team. At that time, was a much riskier deal than it is today, considering the assets you have in place. So everyone's going, oh, Marin was there early. We took huge risks. This has now been de-risked. You're trading at a discount to its true value. Like if you want to be a Warren Buffett and talk about value, you could not replace this portfolio. You could not get a royalty on Cigar Lake. You could not get McArthur River under the nose of Cameco. Think about this, what you've done here. And it happened when everybody was sitting at home scared of COVID. You and the team went out there and did it. And that's something that you cannot replace that. Even for $400 million, you could not build this, what you have today. And that's the other aspect is uranium. Yes, although it's not such a rare element globally, but in economic concentrations, and think about the permitting of a uranium asset. It still has that NIMBY, not in my backyard aspect. So you look at your portfolio and diversity of exposure to permitted, built, producing assets on world-class assets. We're talking about tier 1 assets. This isn't on garbage. Cigar Lake, McArthur River. You look at Langer Heinrich. These are tier 1 assets. Husab, tier 1 asset. The deal with Kazatomprom, tier 1 producer. That is what you want to be exposed to, the best of the best. And, when I look at a Sprott sitting on cash, their whole mandate is to buy spot. So they're trying to figure out what do they do here in this market. And although the world is in a financial crisis when it comes to credit availability. The US dollar is doing extremely strong, and people have to keep their lights on. And as you too wrote about atomic sunshine for everyone, we haven't even talked about SMRs, and we're Silicon Valley, Bill Gates, Sam Altman, Warren Buffett, Peter Thiel, all these major investors are going into the SMRs. And what I find hilarious is this old world of World Nuclear Association doesn't even bring in that supply. Why? Because the SMR companies aren't members of their association, so they don't recognize. What a bunch of bullshit. You were there in 2015 in Paris. When I stood up, I was asked to be the keynote speaker, and I laid it all out, why uranium was going to go lower because of the US dollar. We had the Kazakhs, the utilities. People were shocked on thing, and I bet this is what my book was about. And here we are 8 years later, and you've built this situation. So what do you see happening in the next 2 to 3 years for shareholders of Uranium Royalty Corp?
Yeah, well, listen, you're going to benefit from the portfolio that we've established, but job number one for me as the CEO of UROY is to go out and build and grow that portfolio. And I can tell you the pipeline is quite rich, and we're getting quite a great reception, looking at new deals in anywhere in range from 10 to 50 million for miners, developers that are in that cohort of companies that can come in and produce in this cycle and cash flow in this cycle. So I'm optimistic. There's some deals that are quite innovative. I think we surprised everyone by acquiring the MacArthur and Cigar royalties from a small exploration company from the 70s and 80s out of Albuquerque, New Mexico. There are other opportunities like that, and we're pursuing them. And so we're really fortunate to have the portfolio that we have, but I'm excited about the growth. That's the model of Franco-Nevada Wheaton Precious, is if we have 20 royalties on 18 interests today, I want to have 25, 35, 45 royalties each year as we go forward and grow this company. That's the success model we're following.
And the final thing I will throw in as a major investor and backer of this company. People forget whatever happened initially to Franco-Nevada 1.0. It was such a strong business model that eventually Newmont bought it out.
Yeah.
What I believe will happen here ultimately is the value of not just secured Western pounds, but royalties and streams on secured existing producing uranium assets like Cigar, MacArthur, what you have in the US. That alone will trade at such a demand value, because what people keep forgetting, unlike a gas utility, the price of uranium is essentially negligible after you've built this reactor. It's all about a stable, secure supply. And historically, going back to the yellow, if there's really anybody who loves this sector, go back to the 70s book about the yellow cartel. Because of the over-aggressiveness during the 70s, you saw this whole paradigm that we've talked about for many years, the collapse of the Soviet Union's, downblending the nukes. We are now in an inflection point, and we're just at the beginning of that first phase. I eventually see Uranium Royalty Corp being bought out by either a major utility, a major producer, or a fund that needs what I call a sure thing, a strategic uranium reserve. And this is the only energy commodity that doesn't have a uranium reserve or a commodity reserve. So I'm very bullish moving forward. Is there anything you want to leave our subscribers with?
No, I think, listen, it's exciting to see the vision coming to fruition. I think it's exciting to see the macro and the supply and demand fundamentals coming together. I think there's never been a better time to invest in the uranium space. And I think UROY, again, brings some of the best aspects of equity, physical commodity investing, and ETF into one investment. We're well on our way. We may have launched early, kind of late in the last bear cycle, but I can tell you we're hitting on all cylinders and hitting the ground running with what's happening in the world today. So again, we appreciate your early support of the company. You had a vision back then, and it's exciting to see what's happening today.
Excellent. So for anyone interested, go to their website. You have all the information on their PowerPoint, Uranium Royalty Corp. On the NASDAQ, the ticker symbol is UROY. On TSX, it's URC. Scott, I wish you nothing but health and success. You're doing a great job. And on behalf of my children and their children, thank you for executing on your business plan.
Great. Thanks, Marin.